Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, May 21st, 2023. Hope you guys are having a fantastic weekend, and let's get started. I was traveling on Friday. I left early in the morning, and when I was leaving, the futures were up seven, and that was at 10 to 5 in the morning. But what I had put out was that we wanted to take a quarter size position using SDS, and if we gap open, take that quarter position at the open, just a market order, and I'll touch base when I land in New Jersey. So we had the gap open here. We got filled at 42. The open was, hang on one second. Here we go. 42.10. And I think the top was a little bit higher than that, and that was it. But from there, we got a really nice pullback. So, looking at just this, where we are with this particular top right here, it's suggesting that we may come up and actually touch the top again. But as I've been saying, our predictive analytics model is really looking, we're looking down, not up. So if we're lucky and we get another push up, we want to use that at the next pivot to build a short position. And everyone that's really trying to bid this market up right now are going to end up turning into the panic sellers, and that's when we're going to be covering our short positions. So, we had these bearish divergences here. This move right here, took out where we may have to form another bearish divergence, meaning like this, and that can happen with just really a test of these highs or maybe a little bit of a break. But if we look at the 60-minute chart here, you can see, this is the line I showed you guys on Thursday night, where it's the three touch rule that I'd said, where you have one, two, three. This is the third touch. So now I bring my trend line across. Here's your one, two, and this is three. So here we have bearish divergences kind of in place, but it's sometimes you need them a little bit more. But you can see that we had bearish divergences on the momentum indicator here. And the bulls are really just running low on fuel. Now, the reason why I'm pretty confident, or very confident, with shorting any bounces is our NIAID sell signal that we have in place, and this it is yet to prove me wrong or prove any trade wrong. And it's whether it be on the long side or the short side. And as I was showing, this is some of the largest bearish divergences I've seen since following this indicator. And on top of that, we actually have a double bearish divergence where you can see the NIAID right here making lower highs and actually lower lows, as the S&P is making higher highs. So the breadth is not supporting this move right now. And to me, this is the master planners trying to get these bears, because there was a lot of people that were bearish this market all the way down, at levels a lot lower than this. And they're now, they're trying to get them to cover, and this may have been a big part of that. So I'm leaving the door open that we do have another test up here. Something like this. This would make sense, where we come up and this is another little test up here. But if we head down, then fine. We run our trades with three-quarters of a position. If it moves up, then we fill our trade. So it's really that simple. You don't, I'm open-minded on what it does. We do have some bearish divergences, but it's nothing that is as defined as some of the other ones. So I leave the door open for another test of it. But the fact that we have this NIAID sell signal, this market could turn at any time. Now, we were expecting volatility to start last week, and it's going to be carrying on. So we may see that accelerate going into next week. And if that does, we're probably going to see our short positions really starting to gain some momentum. And everybody who's doing the panic buying right now because they're hoping there's going to be a debt ceiling resolution. They're going to find out that they were panic buying for nothing, because even if they pass it, the debt, they raise the debt ceiling the way the Biden administration wants it, with nothing being cut at all. it really does nothing for the market. It just stops it from, we're not going to have a crash. That doesn't mean that we want to turn around and, the market's going to scream higher because it's not going to crash. We're still in a situation where the Fed is, tightening, or, is tight with their money. We have regional banks that are in, chaos right now. And we're seeing companies lay people off left and right, and we're borderline heading into a recession right now. So the fact that we, even if they do pass, they raise the debt ceiling, it really means nothing as far as the overall market. So again, if it comes back up, we're probably, what I would be looking for as far as the next pivot on here. Let me just make this a little easier to see here. Would be somewhere right around this the 42.26 level. Now, if they get above it, I've been saying that there's a chance we get up to the 4,300. I just don't believe that the bulls have gas in the tank. And really, the main reason is, look at these bearish divergences on the daily chart. And again, if we just look at the weekly chart here, let me just zoom in on this so I can get the chart on the screen. Here we go. If we look at the weekly chart here, you can see we have bearish divergences on that. We're overbought. So to me, you don't try to overthink things. You let the media say whatever they're going to say. And if we head higher, we just build our short position with confidence that the predictive analytics model is saying that we're going to be heading lower. And really the first target is going to be this 40.50 level. Now, if the bears can get through here, then we're going to have a pretty quick move down to this 39.09. And being we're getting short up here in this range, if it comes down just to the say the 40.50 level, it's still a 150 point gain. And that's really what our goal is on these trades. But I do believe we're going to head lower, but we're going to get some bounces. And that's where what you do is you manage the your position. So if we get a move down and we're about to hit support, take a quarter off. If we get through that support and we go to the next support level, you take another quarter off. And then when we get the bounce, you start shorting those back. And you keep doing this because we took our we had a half a position on the short side, and we covered it a quarter, half and a half, so a quarter right here, and then we started buying it back right here, and now we're adding up the second half of it. So it's the way this is working out. You just let things play out as it is. Like I said, I can travel, not have to worry about what the market's doing. We have our pivots. This is why we layer in. Our model is looking for a move to the downside, and we just be patient with it. So, just moving on into tomorrow. If the bears can get through this 41.80, you can see there's buyers stepping in here, and that's this support. Then we're going to have, there is support down at the 40.70. Let's just say it's 40.80, 40.78. The next support level we're probably going to be hitting is going to be right around this. I would say the 41.50 level. And if they lose that, that's when we're coming down to the 41.37, 41.20. Again, I'm not sure if these divergences are enough. And looking at the 15-minute chart, this is telling us that we still have another move higher before lower. Like, when you get this kind of move like this, where here, typically what happens is you go up and then we see that we start seeing the sell signals on the 15-minute chart. And then that's when really it's time to get very, very aggressive, because we'll have, even our short-term indicator that's looking lower. So it should happen anytime. But again, here's our support level. If they lose that, the next spot's going to be the 41.60, 41.50. Below that, then we're coming down to the 41.30. So if we gap higher, obviously this 41.12 or 13 is going to be the resistance. If they get above that, then we're probably going, I'm sorry, 42, 12. If they get above that, then we're probably heading up to the 42.20. So enjoy the rest of your weekend. Have a great night, and I'll talk to you guys in the morning.